Hey everyone, welcome back. First of all, I'd like to apologize. I've not been putting in regular videos. I had some personal issues that I was taking care of. I was actually not even in the US. I was out, good to be back in my apartment, my one bedroom apartment. But, I had certain personal matter to take care of. I'm also looking for a new job at my workplace. That's taking a lot of energy, which may not be a bad thing given the market volatility over the last few days. It was a tough time. I saw my portfolio went all the way down to about $199,000. I was hoping it wouldn't dip below 200K, but it did. But I just thought of putting an update, what my thoughts are, where the portfolio currently stands. A lot has happened. We've had a dragging Ukraine war. We've had Fed come out, be a little bit more aggressive, but more importantly, decisive. I remember in one of my videos, I'd said that I think by March of 2022, we'll have more clarity and the markets are going to rally then. Between January 1st to March 15th, I'd mentioned that it's going to be tough because, again, the clarity from Fed was just not there. And I think since we have got more clarity, I think it's easier to price securities. Think of it this way. If your interest rates are going to be, are not going to be known, you can actually use any interest rate to value a security. The higher the interest rate, the less the present value of the security, which is the stock price. But once you get the clarity, then you're not speculating anymore. You know exactly what you need to use as your base to actually calculate the value of your securities. And I think that's what market is showing us. Either ways, I just thought of putting a quick update as to where my portfolio is. And I'm really glad, that I've stuck to it. I'm really happy that, things have worked out. And I think it tells me, couple of things. One is that, at the end of the day, let the market do its thing. Do not try to outsmart it. I don't care who comes on, talks about which securities to buy, which stocks to buy, the strategies, what they think. I don't think anybody knows anything. Only thing that I know, that I at least believe, if I may not know it completely, I believe in it, have faith in the American economy. And I believe that at the end of the day, if you've bought good securities, you are going to be, ending, doing well at the end. I feel that you just need to buy good companies, let them do its thing. There's going to be these short-term noises, let it be. Now, if you're going to buy companies that just, IPO'd last year, are selling at 70 times sales, and so on and so forth, yeah, it's going to be a problem. It's not going to be easy. It's not going to be, it's going to, market is going to tell you that, do not play with fire. And that's what I realized. I had companies like Microsoft, Apple, Adobe. These are all solid companies. Home Depot, Goldman Sachs, Target, Abbvie. These are all solid companies. And once you know that you've invested in these solid companies, they have great balance sheets. I've actually gone in and actually seen their balance sheets, looked at how much debt they carry, and so on and so forth. I think, at the end of the day, I'm very happy with where my investments are. And, I just let it be. And, I'm really convinced that all you need to do is stay in the market. Time in the market is bigger or better than timing the market. I've tried to time the market. It doesn't work. I have stayed in the market and I'm really happy that I have. And if you look at it, if we look at my all-time gain is still about 58%, which is $83,000, which is really amazing. Again, my portfolio is 2.5 years old. I started in 2019, September 2019. So I'm really happy with where things are. As I had mentioned, I had gone all the way below $200,000, which was kind of sad. But because I was going through my personal troubles, I did not have time to sort of, look at my portfolio every day. As a matter of fact, I kind of like, as things were going awry, I kind of like shut it down. I deleted my Robinhood app. I was at one point, because I don't want to add this stress to everything else that's going on in my life. So I was just able to ride the wave. I wasn't paying much attention. I had mentioned in one of my previous videos that I had invested about $8,000 since the beginning of this year, and that money just evaporated. It just went in and just evaporated, but that's fine. I've also gone in over the last 15-20 days. I've also gone and invested $600 to $700 in the market. Just want to keep it going. I just want to keep being disciplined in trusting a security, not selling it, and adding to my positions where I think the prices have come down. For me, this time around, and this was the same as it was during the pandemic, it was easier. I just looked at where my average cost was higher than the price, knowing that the securities that I have are actually good securities. One thing I would say, one company that I added to was Shopify. I added about $600-700, I think there. Realty income is another one. My average cost had become higher than the price. I added there. Now the price is bigger than the cost. More important is that I get $25 a month from dividends. So I'm not losing sight of my dividends. So it's very simple. Take money and go into VOO, which is the S&P 500, or any security that the price is lower than your average cost. And I just kept on doing that, adding more and more. And I'm glad that my portfolio is at 226,309. At the top of its value, my portfolio was at $267,000, if I'm not mistaken. $267,608, and it went all the way down to 199. Definitely could have panicked, but again, as I mentioned before in my videos, I do want to build a community of focused investors who are not bothered by what's happening in the short run. And in the short run, if I really think about it, my portfolio went from 267,608 to 199. I could have easily pulled my money out. I could have said, look, I'm still getting some gain. Who knows where it's going to go and what's going to happen. Is the war looks like it's not going to end very soon, and so on and so forth. But I said, no, I have my emergency fund. I have my money that I've saved for my family, for myself, and I don't have to pull money out of this portfolio. So I'm not going to do it. At the end of the day, I want to be an investor who wants to look at this 25 years from today and see how it turns out, and not be pulling money out when, I think things are falling apart and so on and so forth. So I'm really happy. I have continued on with my, small little investments, $5, $10, so on and so forth. As a matter of fact, I've added to my positions in Abbvie. If you really think about it, Abbvie is at $159, $160.62. My average cost is $97.81. And I've mentioned before that per Robinhood, the Morningstar report, I think Abbvie's fair market value is $114. So the way I think about it is, as long as I am staying below the 114 and adding to my Abbvie's position, I'm okay. Why? Because this gives me easy dividends. I understand the definition of crazy might be subjective, but I love this company for the dividend that it pays me every single quarter. The last dividend I got from Abbvie was about $90. That's the most that I get from any company, and I'm really happy. Obviously, that dividend comes in and it goes back into the market. I buy other growth stocks from it. $90.40. That was when I owned 64 shares, and I think now I have 65 shares, if I'm not mistaken. So at the end of the day, I have continued to add to VOO, and any company that went below the average cost. That includes Facebook as well, by the way. I know I'd made a video on Facebook that I did not want to invest in Facebook anymore. but I think it's beaten down so much. There's so much that has happened that, if you just look at from a business perspective, it's so devalued. $211 or something like that. My average cost is well above $211. I'm losing $1,500 on Facebook. So you know what? It doesn't matter. I added some that I added also I added to my positions in Asana. Now, the reason why I like Asana is very simple. If you have insiders buying a company stock, you know that company stock is, they believe in the company. So I bought Asana. There's a CEO of Asana, found this opportunity of buying back more stocks as the stock price fell. And I'm betting on him, betting on his company. So if I look at Asana, I'm very happy with the number of shares that I have. As we go along, as I get more dividends, I might slowly, steadily add to my number of shares. But again, this is my personal belief, as I mentioned before. It does not comprise any sort of, financial advice. The only thing I can say with conviction is you got to stay invested. You got to stay invested. You have to be invested. You have to save money and you have to put your money to work. And for a person like me who does not have the resources to go into real estate or even the temperament maybe to even go into real estate, I think stock market is the perfect place. And I think I'm going to continue to actually add to my positions into stock market. I think this is still the single most accessible vehicle for making wealth. My opinion, again, I could be absolutely wrong, but I think I have full faith in it. I believe in it. Thankfully, I got some tax money back, which I again added my savings, and also added to my portfolio here. So I'm really, really happy. And just to sort of, give you another data point of how once you invest consistently and do not necessarily meddle with, your investments of pulling out and, buying this and selling that, and, this is not looking good, or that is not looking good, or some news comes out and you're like, let's sell this stock. If just a another data point, I actually, to be honest with you, have this stock, which this portfolio, which basically has I started it pre-pandemic, and it is $1,497 as of today. It has gained 30.3% from when I started investing. Every now and then I put in $100, and the M1 Finance, the good thing about M1 Finance is that it just simply takes the percentages that I've already given it, and divides that $100 into it. So I've created my own portfolio, and this goes in there, and I'm able to create my own sort of portfolio, and my fractional shares are based on what I want the percentage weightage to be. And I have added to this. I've added securities to this. I kind of call it my daughter's portfolio. I want to keep adding to it. Once she goes to college, hopefully she does go to college. Hopefully she does go to a good college. Obviously, as an Indian, that matters. But as somebody who's been in North America a long time, I also think that I don't want to put undue pressure on my kids. But either ways, I think this portfolio can be a college fund. And all I'm doing is adding $100 every now and then. I honestly don't look at it too much. I didn't even know what was going on here. There's some dividends that come out of it. I've added some securities recently. I've got Alibaba here, Plus, which I added recently, Target, which I added recently, Netflix, which I added recently, and then TJX, which I added recently. So again, all I do is invest $100 in here. It breaks it down into this portfolio, $1,497. That's worst come to worst. If I ever have to use this money, I can actually go and use it. It has a 30.3% return. This was started right before the pandemic started, 2 years ago today. Actually, if you really look at it, today is March 21st. If you really were to look at it, let me show you something interesting. I think today was the day when stock market started to rally, if I'm not mistaken. March 20th. So March 20th is when the markets were at its bottom, and today is March 21st. So anybody who had invested years ago, you know, um, at this point in time, would have made a lot of money. Any money that you put in, there was a huge returns you've gotten. So from that point on, you've gotten about 60-70% returns, or 70-80% returns. That is really amazing, at the end of the day. But either ways, this is my portfolio update. I've also, because I've been adding to my positions, as far as my dividends are concerned, they're growing as well. Soon I'll be hitting $200 per month with this portfolio, and I'm really happy about it. I've been, if you look at it, from a portfolio perspective, my portfolio is doing quite well. Even from a dividends perspective. So that's what actually excites me the most. And I know that that's not necessarily growth, but I really am interested in my dividends. And if you really look at it, I'm going to get, I've been getting some steady flow of dividends. $19.15, 669, 23.17, $8, and so on and so forth. And at the end of the day, I have been buying with those. Like I bought Abbvie for $5.68, Vanguard for $20, Meta Platform for $25, Asana for $44.32 today. So I've been putting that money that I'm getting from dividends to work again, but I want to continue to steadily invest in the market, despite the fact that I've seen some downturns in the last 3 months, and I think I've been able to weather the storm. So again, note to self, I'm not advising anybody, but note to self, to stay invested is the best thing you can do. Do not look at it on a daily basis. Do not try to rebalance your portfolio. Pick good companies. I think I picked too many companies. Pick good companies and just stick with them. Some of these companies that I have here are the companies that I interviewed at, and I didn't get a job. And I was like, at least I can become an owner in that company. So I think I picked too many companies. But you know what? It doesn't matter. Keep at it. Keep invested. And you know what? I think will be better off than sort of, timing the market, not investing, and so on and so forth. My dividends are about $2,000 per annum. And as I said, soon I think I'll be hitting the $200 per month mark. That'll be significant. I want to get to $500 per month. That'll be awesome. But either ways, just wanted to provide a quick update, and and I apologize for sort of not being able to put an update more frequently, but I'll do it more frequently now. I'm hoping the markets are going to be a little bit better than what they have been in the last few days. Either ways, thank you so much for listening, and thank you so much for all the views. Because you know what, I'm just a random guy who has a goal of getting $1 million in his portfolio, and I really want to tell you that I want to sort of document my journey as I go ahead doing that. And if I can do it, anybody can do it. I do not think I have anything special, but I want to prove that this is not, an average person like me can sort of, do it. So I'm on that mission. Anyways, talk to you guys later. Thank you for listening. Bye.